Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's take a look in the gold market. So no doubts, gold market shows the positive mood right now, so showing the outstanding rally that we saw last week. And in general, although this price action stands according to our long-term view, as we said, that just in two words, the whole background that we have explained in our weekly reports concerning gold, saying in two words, when the market when the world stands in a global shift of the political, economical order, when the order is changing, hardly this shift will pass without any turmoils. And when the global system changes, this always is accompanied by different economical, political turmoils and here and there, and that raises demand for the safe haven assets. And that's our just logical, common sense background. It has some additional explanation from the fundamental points and economical points, but speaking on the common sense, that's the major idea. And now we see that indeed this happens. So is it a tariffs war can't be called as a global turmoil and shifting of the global order? Of course it could, and that's just the confirmation what we have. At the same time, we have the mixed view, mixed senses on the current situation, because despite that we were correct on the direction, it was really the tough challenge trying to catch this action. And that because this action and in general the gold market is driving recently mostly by the political factors. And the action, the swings, the rally on the gold market and collapses on the gold market, starting and stopping just by the politicians. And they are not, they can't be predicted by the technical analysis. Technical analysis currently taking backseat, just because this action could easily come and this action could easily go. And Donald Trump words makes the water from the flint. It could put market in one direction, but tomorrow it could put market in another direction. And we see the most big risk with this issue, because rising of the gold currently, it's not some persistent, it has no persistency, so it is not is based on some gradual but stable increasing the demand by some economical reasons, that which can't be turned just very fast. Since this is the global process, there are investors increasing the part of the gold in their portfolios, and that this action has the momentum, persistence, and it can't be stopped. Here we do not have this. Donald Trump tell about Mexico tariffs, gold is skyrocket. Tomorrow it will tell that he changed his mind, gold market will collapse. So that is the truth. So this is although we're correct on the direction and it's coming, everything is coming in the same way, but this is the risk that we need to understand. What does it mean for the trading of the gold market? So currently, as you can see, that market actually has completed the predefined target that we discussed last week in our weekly report. So market hits our OP with this ABCD pattern. And as last week, the imaging this rally was difficult from the technical point of view. So last week we were watching for the technical analysis, the price behavior here. It was so heavy and very lazy, so it was not impossible just to imagine this rally. It means that currently situation changed on 180 degrees, and currently it is very difficult to imagine the collapse here. So you can see so strong rally that you can't just put in the mind the possible big black candle right back down. So, and the technical picture tells that everything stands in favor of upward continuation. Not immediately, maybe, but for upward continuation. It means that on the daily chart currently the context has changed. And for daily traders, it's time for sitting on the hands. Because currently, despite the strong rally, market from technical point of view stands at the resistance. You can see market has completed the ABCD pattern, stands at the OP, right at the daily overbought, and around monthly pivot resistance area. So this is the area where market could turn down. So currently, of course, we do not speak about major bearish reversal. The only thing that we could count on is just a pullback, retracement. So if you would like to trade gold on the short side, that's only for scalp traders. So those who trade on the intraday charts, on the hourly chart, 5-minute chart, they could find here possible bearish pattern, take the scalp short position with the minor retracement. For the daily traders, context is bullish, and we should wait for a moderate pullback, reaction on this resistance, and consider the possible taking of the long position with the expectation of the upward continuation to the XOP. Because market hits the OP with a fast acceleration, and in most cases, technical analysis suggests that the chance on reaching XOP is great. At the same time, guys, reaching of the XOP means erasing of our major ABCD pattern here. So in this case, market will move above the C, and it automatically erases all uncompleted targets that keeps our concern. If you remember, we talked about it. So it will erase all these targets and just will free our mind with the possible upside view. So that is situation that we have on a daily chart. So catalyst cheaper to sell is clear, but it's tricky by the same reasons as we said. And currently we could accept only idea of possible moderate pullback here maybe. So that is what we could keep an eye on the daily intraday basis. On the XOP, we also can't talk on the perspective of the common week, just because market stands in daily overbought. Yes, gold is a commodity market, and could spend time above the overbought for a considerable period of time, but it needs really strong factor to put it here strongly above the overbought. I think that the non-farm payrolls hardly will be the driving factor for the gold market that could lead for this type of action. So on the 4-hour time frame chart, you also could see the market hits our XOP that we talked about. And currently, guys, on the intraday charts, we could speak only on some patterns that could be based on the thrust. Because as you can see, no clear reversal patterns have been formed. You can see straight upward forward action. No patterns was formed on the top as well. What we could consider here. First of all, of course, any patterns that based on the thrust, the Judd Napoli patterns. It would be bread and butter buy that could give us opportunity to buy around 12.95. It could be double repo sell. In this case, we could watch for a bit deeper retracement maybe, but also it could be double repo failure. So any failure means that we could take position an upward continuation as soon as market will form the double repo failure. Also, we could keep in mind possible ABCD retracements, catalyst cheaper to buy. So the common stuff that we usually are watching for when we're keeping an eye on retracement. So as a bottom line, we have the bullish context, we have the bullish strong action on the gold market, but market stands at the overbought. It means that we are watching for moderate retracement where we consider taking the long position. Scalp traders, as soon as we will see some bearish reversal patterns here or even on the lower time frame, well, could consider taking the short position. But this is really carries significant risk and suitable not for everybody. So this is our view on the gold market currently.